the platform that I'll use to kind of demonstrate the strategy. Let me just walk through the overview of this game. So basically what it is it was designed by Robert Kiyosaki. He's the author of Rich Dad Poor Dad. And although he's somewhat of a controversial figure no, he has put out a lot of information in terms of helping persons to understand personal finance and the game of wealth. And I say the game of wealth intentionally because he actually demonstrates that wealth building is a game, and he did that physically by building this. Um, and if you have seen how markets move, you can start to appreciate the gamification of wealth. So how this works is there are a few strategies that you can use to win this. And I actually figured this out by playing the game hundreds and hundreds of times. I'm sure there are other ways to win it, but the five strategies I developed are strategies that are actually based on my experience and stuff that I would have read. So if you read all Robert Kiyosaki's books, you'll ultimately find ways to actually win the game, as well as through your own experiences. So what the game entails is it has this section which is known as the rat race. And what you're basically doing throughout this game is going around the rat race, trying to build up enough passive income. And once your passive income exceeds the amount that you have to spend on a monthly basis, so your monthly expenses, then you graduate to this part of the game, which is known as the fast track. As we go through the game, well, before I say that, in starting out the game, what he does is he presents you with two things. One is a position. So it tells you like who you are, what the salary you're making is, how much you're starting out with. So in this case, it's you have a savings balance of $480. Um, and it gives you an income every time you go around the um the circle, the rat race, you get paid, let's call it three times in a full rotation. You'd get paid three times. So if you want to look at those as months, this would be, say the full circle is 3 months or a quarter. And as you're going around it, each of these little tiles or these segments of the circle represent either an opportunity. So the green ones are opportunities, a life event, um, or so it can be either an opportunity, a life event, a catastrophe, or an opportunity to get paid. So in going around it, once you start playing, you will start to see what those opportunities look like, what the life events look like, and how to navigate them. Another thing that it starts you out with is a financial statement. And in fact, I would have shared something similar to this in either our first or second session. It's your personal financial statement that you can fill out to kind of get a snapshot of where you are at any point in time. So this one shows you that you're a nurse, you're earning 3,100 US every month. These are your expenses. So you have taxes, a mortgage, car payment, credit card payment, retail payment. That's like on a Amazon card or something like that. And then other expenses. And then it also shows you the assets that you can acquire. Well, it has a space for the assets that you will acquire, um, and as well as your liabilities. And the aim of the game is twofold. One, you want to first get fill out this bar. So you want to get this bar at 1,950. So you want to increase your passive income from $0 in passive income to 1,950. And once you do that, then you will graduate from the rat race onto the fast track. And then the other thing now that you'll do in the fast track is your aim is to effectively afford your dream. So when you first start out the game, other than getting your description or your persona, which would detail your profession and your salary, savings, etc., it's also going to ask you to choose a dream. So for me, I always choose one of two things, either the stock market game for kids or the research facility. And I'll just go around here to show you some of the different options. Um, so this one says yacht racing is your ultimate goal. Another one says Cannes Film Festival. Another one is private fishing on a Montana lake. Um, getting a park named after you. Running for mayor, so going into politics. Um, gift of faith, so giving to a significant amount to a religious organization. Skiing in the Alps, so retirement young and skiing in the Alps. Dinner with the president. This is the other one that I normally choose, the research center, sorry, for cancer and AIDS. And that's because my ultimate goal is to build a research and development center in the Caribbean. That's my ultimate. Um, then you have Seven Wonders of the World. So it's another goal to travel around the world. And there are a few others. Um when you attempt the game, then you will see the different options and you can choose. And there's no judgment regardless of which one you choose. All right. So, Monifa, I see that you're with us. Good evening. So, I was just explaining the game, but I'll go over it as we get into the actual playing of it. I do want for this to be very short. I don't want to belabor the points much because I would have spoken to most of the strategy that I'm going to be using in the previous sessions. So, just to reiterate, for this work, I'm calling it a wealth building workshop. For this workshop, what I'm going to demonstrate is effectively how to escape the rat race and achieve wealth. So, achieve your ultimate dream through building wealth. Using what I call the capital gains strategy. So let me just talk through briefly what the capital gains strategy is. Basically, what it entails is for me, I'm going to be buying stocks every month that I can. So once I go around this circle and I get paid, I'm building up my cash reserves, and then I'm going to buy stocks. I'm going to buy them at a very, very low price, and I'm going to be seeking to sell them at the highest price. Now, because I already know the game, I know what the stocks are that are available in the game, and I know what the price ranges for those stocks are. So you'll see that. Now, taking it into the real world, if you monitor the stock market, then you will know particular stocks. And if you choose to study stocks as your asset class, then you will know, for example, that when you see an NCB at $20, NCB is cheap versus when NCB is at $100. And you would know also that that's a realistic price range for NCB. So how would you apply the strategy? You would basically keep saving your money, probably save it in a high yield savings account. And when the opportunity presents itself for you to buy NCB at a very, very low price, you go very hard into it. So this one doesn't focus as much on diversification. The only time you'll see me kind of diversifying is if I see another stock that I'm following and it's extremely low price. So like a $5 or $1 stock that I know has the ability to go up to $30, $40, right? I'm also, as part of this strategy, I'm going to be ignoring every other opportunity. So if I get a house offered to me at a very low price, I'm ignoring it. if I get um if I get a rare coin, a rare gold bullion coin suggested to me, and I know I can sell it for $50,000 if I continue to hold it, I'm still not going to do that because that's not the strategy I'm pursuing. If I can buy a house and I know if I can buy a duplex, for example, and I know that eventually there's going to be an opportunity to either raise rents in that duplex and um, increase my passive income, I'm still not going to take on that opportunity whilst I'm building my stock portfolio. So my main objective in this strategy is to do two things. One, I'm going to be going around the circle, building up my cash flow and buying cheap stocks. The second part of the strategy is where once my stocks are now valued at a um, are overvalued then. Once my stocks are now overvalued, I'm going to sell them and I'm going to use those capital gains to buy either a business or real estate that is then cash flowing to allow me to get to the point where I'm reaching this $1,950 in passive income. And that's basically how I'm going to get out of the rat race and onto the fast track. Another thing, I am not going to be using leverage in this strategy. So I'm not going to be taking out any loans. I'm also not going to be paying down my liabilities. So I'm not going to try to clear the credit card. I'm just going to keep paying the minimum payments on it. I'm not paying off the car. I'm not paying off the house. All right. So that's the strategy in, well, probably much more detail than I was intended to go into initially. So let's proceed with the game. So I've chosen my aim is to build my research center for cancer. My position is that I am a nurse earning 3,100 US, and on every payday, I get, after paying my expenses, I get $1,150. All right. So that's where I'm starting. So basically, what I'm just going to do is just keep rolling this dice, and I'm not going after, I'm going to be skipping opportunities until I get up to, like, say, $5,000 in cash. That's when I'm going to buy my first stock. So this is what I meant when I said it's going to throw life instances at you. So as we go around the circle, every time you come on one of these little blue segments, you're going to spend money. If you go across this purple sector, then that's going to basically give you a child, and you will have that child as an expense. If you go across this one, it's going to be a downsizing where you basically lose your turn and you have to pay 1 month's full expenses out of whatever cash you have. So that's another reason why I'm not just starting out immediately and putting every single bit of cash that I have into stocks, because I know that life can happen. Um, this one is a special, this sector is special in the sense that it gives you an opportunity to either roll two dice and um, you'll make a donation. So you can make a donation of, say, 10% of your income and get the opportunity to roll two dice as opposed to one. So, all right. So the life instance in this case, I landed on one of the life instance sectors. So I had to pay $500 out of hand. I don't have enough money, so now I end up in debt. So I'm going to have to take out a loan to um to to meet this. If I don't take out the loan, then I will lose the game because I will ultimately be bankrupt. So this is now forcing me to take out a loan. Um, I will proceed with the loan such that I can make the payment. But again, I'm not going to pay off the loan um, as I'm going around. My aim is to really build up my cash. And even in taking out that loan, you can see that my cash now goes up to 1,000. $480. Of course, I have the $1,000 loan here on my liabilities, which I will have to pay an additional $100 a month for. So that's this loan payment that now goes on my expenses. I'm okay making that payment and collecting the $1,000 every month. The $1,000 is what I'll have left after making all of my payments. You will also notice that my total expenses now has gone up by $100 to $2,050. All right, so paid that, end the turn, I'm continuing a row. So now I get paid. All right, so in getting paid, you can see my cash goes up now to $2,030. End the turn, continuing to roll. This is one of the deal cards. So you can either select a small deal or a big deal. For me, I'm always going to choose the small deals whilst I'm just looking to build my cash flow. And again, remember, whilst I'm looking to build my cash position. And remember, I'm aiming to get to $5,000 in cash. So I'm not going to participate in any deals. So even though this is a house, I'm passing on the deal. Continuing, have to pay $40 because I go to lunch. Continuing, all right, so now I have a child. And this increases my expenses by $170. Continuing, I'm presented with a deal opportunity. I see, all right, so now the stock comes up and I can buy this stock at $10 and they give you the range. So they tell you that the stock goes from $5 to $40. So at $10, it's a bargain because it can go up to $40. However, it can also drop to $5 or to $1. So because I would consider this, but because I'm not yet at my target um cash position, I'm going to pass on the opportunity and just remember that that stock exists. Another opportunity, this is another stock, Mighty for You Electronics. Again, its range is 5 to 30. This is another stock that I can consider. I'm rolling, paying, and my only aim here is to get to that $5,000. So here is a company, an opportunity to start a company with $5,000 down. Well, one, I can't afford it at this point, but two, this is not my strategy. In fact, I have another strategy where we take this route, where we go and it's called the entrepreneurial route. You would have probably seen me speak to it in the group. But the aim of that strategy is to basically buy and start businesses. Continuing. And at this point, I have reached my $5,000, right? This is an exit opportunity. So if I had an asset, raw land in this case, which we will talk about in the real estate strategy, then I could sell it on this opportunity. So it's a unique opportunity for somebody who wants to buy land, a builder who wants to buy land. So if I had that asset, I could sell it. Okay, so now I'm at $6,000, right? What I'm going to do is I'm going to pursue a small stock opportunity. And as luck would have it, OK for You drug company is now selling for $1. So well below where its normal range is. You can see how quickly we get rich doing this. So if I buy 6,000 units of the stock at $1 and then sell it the 6,000 units at $40, that's a significant gain. And that puts me well ahead. So what I'm going to do is I'm going to buy $5,000 worth of this stock. So I'm going to go 5 and then put 5,000. So now if I go to my balance sheet, you'll see that I have 5,000 shares of the stock at $1. So what's my next move? My next move is to do one of two things. Either sell these stocks at $40 or build up my cash reserves and then look to purchase additional shares or more shares in another company. And in pursuing this strategy, I can do both. So, all right, I land on a small opportunity here. And this is another stock that is selling for $1. But I'm not going to purchase this because I still want to keep some cash on hand. So I'm going to pass on this very attractive opportunity. And that will happen on your way to building wealth. You will have to pass up um, very good opportunities. So continuing, I'm passing on this opportunity. Life happens, and here now I've added another child, and my expenses is now increased by $170. My cash keeps increasing, so that is still fine. Now, my company has undergone what is known as a reverse stock split. So effectively, I've lost half of the value of my stock, half of the amount of my stocks. So now I only have 2,500 shares, and that will happen when you are investing. So you have to be aware of these things. But that does not take away from the opportunity to build wealth. And so a part of it is really just continuing as you pursue your strategy. So here's another opportunity to start a company, but this time with $3,000 down. Because it is not aligned with the strategy, I am passing on that opportunity. Getting the opportunity to donate, and I'm going to actually take this opportunity. So I will pay the $310. And what will happen is that I will get the opportunity now to roll two dice. If you want to take this into the real world, then you can look at it as say you donate to charity, you can get other opportunities out of that, whether it is exposure, ability to network with other people, stuff like that, that allows you to actually make more in the long run. So because I have two dice, it allows me to do such things as, for example, jump over the unfavorable life instances. So now my cash is back up to um to $5,000 basically. And again, I'm going to pursue a small opportunity. In this case, it's a condo for sale. I am going to pass on this opportunity because it's not aligned with the strategy. 10 acres of raw land, you'd have seen previously where there was a land buyer looking for land. So if I wanted to, I could purchase this and then look to sell it. And that would fit in the capital gain strategy. But because, again, my expertise is stocks, that's why I'm going to pass on this opportunity and continue going through life, waiting for the opportunity to either acquire stocks very low or sell those that I have at a really high price. So this would be one of those opportunities where I could sell this stock, the mutual fund grows for us fund at $30 if I had it, which I don't. So I'm going to again pass on this opportunity. Gross for us is now at $10. I'm going to pass on this because I'm not looking to buy it at $10. Onto for entertainment has a range of $10 to $30. So what I'm going to do is I'm going to actually buy 300 of these shares because it is at the low. So I'm going to purchase 300 of them. This is a flex buyer that's looking for condos, fourplexes and eightplexes, but I don't have that. So you can keep these in mind for when we look at the real estate or the capital gain strategy using real estate. Life event, I had to repaint the house, spend $600. Now I'm downsized. This is why you want to keep cash on hand. So now I have to pay the full month's expenses, which is $2,390. So if I didn't have cash, or if in the previous case I had spent all of the money I had on the shares, then I'd have ended up in trouble and have had to do one of two things, either go bankrupt or sell all of my assets at whatever price I could get, such that I could meet the expense. But having cash on hand allows me to kind of weather that storm. This is preferred stock. I'm not here for dividends, so I'm going to pass on this. If you are a dividend investor, then you could pursue that. This is also another cash flow opportunity. It's a certificate of deposit that you'd pay $4,000 for, but I'm not going to do that. Again, I'm pursuing my strategy and I'm being diligent about it. This is another house for sale that you could pay 5,000 down on, and you'd get 160 in cash flow. These are opportunities I'm skipping for now. There will become a time when I will start to take up these opportunities, but that is after I have no pass. That is after I have built up the capital gains from the stock that I want. So here's an example. I bought onto you onto you Entertainment Co for $10. It is now at $20. So I have the option to sell them and double the money that I put in, or I can wait for another opportunity when it is selling at, say, $40, or even it might go down to $5 and I decide to buy more shares. So because I'm looking to get out at the high and I know what the range is, I'm going to pass on this opportunity. I hope we're getting the strategy. Okay, and perfect. So now the stock is selling for $30. And what I'm able to do is I can sell my 300 shares and collect $9,000. You see how I'm basically getting capital gains. So imagine now if I take a small deal, and in this case, I now have $14,000 to deploy in whatever stock that I'm looking to buy. Um, so here the stock is okay for you drug company, and it's selling for $10. Remember, I had bought 5,000 units at $1, and then the company did a reverse stock split where they basically took back half of the shares I had. So here I have the option to sell the 2,500 that I bought at $1 for $10, or I could wait and get to $40. Now, this one is iffy, but because for the interest of time, I'm going to actually sell the shares and collect the $25,000, right? And the reason I'm going to do that is to demonstrate what you do once you make these ridiculous capital gains. So I'm going to sell this, and now I have $39,000 in cash. There are two things I can do at this point. I can now start buying those small real estate companies those small real estate properties that will pay me, say, $100, $200 to bring up my passive income. Or I can put this money back into stocks and then look to do another double or triple. I'm going to pursue both strategies just for the purpose of demonstration. So if I get a small deal where I can put down like a $5,000, I'm going to make that purchase on a real estate property. But I'm also in the same breath going to be looking for opportunities to buy stocks again on the cheap. So let's go for small opportunities. Onto You Entertainment is selling for $10. I'm going to pass on this. I'm looking for something within the range of $1 and $5. That's what I'm looking to buy. Here is OK4U drug company that we just sold at $10, selling now for $40. So sometimes you can actually sell a bit too early. I knew this was possible, but I wanted just to demonstrate what could happen in terms of the capital gains that are possible. So I could have sold for 40 times the amount instead of 10. Okay, so here is a great deal. So I can put down $2,000 and I will get $220 in cash flow every month. This is a older 3-bedroom, 2-bathroom house that was repossessed by the government. You can think of that like NHT, say, so, or a bank repossessing a house and then selling it back on the open market. If you can buy that house and then rent it out, you can see where that now gives you passive income. So I'll buy this and I'm going to show you something here. So I would have bought the house for $35,000. I put down 2,200 and it is giving me $220 in cash flow, in passive income. So my aim now is to basically repeat everything that I've done to the point where I fill out this bar. So where my passive income exceeds my monthly expenses. So in doing that, I would have already demonstrated the strategy, but let's just take this to the end and see. Again, I'm going for small opportunities. This is on the high side, skipping that. Small opportunities. I'm going to pass on this. So this would be like a no interest loan, but I'm not doing that. This is a certificate of deposit. I'm passing on that because again, I'm pursuing stocks. So, right. So now my T4U Electronics would have undergone a stock split. So I could have gotten back my 5,000 shares. Unfortunately, I sold them already. So again, we just continue looking for opportunities. I can purchase this, but I'm going to pass on it. And I'm going to show you what happens when you take this strategy to the extreme. So I'm going to pass on this. And just to tell you guys what I'm going to do, I'm going to basically look to purchase a stock at $5 and I'm going to deploy about at least $25,000. So my T4U is at 30, so I'm passing that. Let's go 2 die, so we hopefully skip the live event. Small. I'm going to pass on this house. I'm going to pass here since I'm already doing that. This is another great deal. So because it is so great, I'm going to actually purchase this one. $5 stock. Wonderful. So what I'm going to be doing is buying OK4U drug company. And because I have $40,000, I can buy 8,000 units of this stock. So you can imagine if I buy 8,000 units and it then goes to $40. That is basically $320,000 that I would be getting out. And that allows me to buy anything, basically. So let's buy the 8,000 units of this. And the reason why I'm buying 8,000 is because I actually have enough money in case there's a life event. So I would be able to afford it. So I'll buy those shares and I'll end the turn. And look at this. So now the next card is this OK for you drug company is now selling at $50 per share. So with this, I'm selling my 8,000 units. I'm collecting $400,000. And this now allows me to effectively get out of the rat race completely. So now I'm not going to purchase small deals. Now I'm going on the big deal side. So here I can put down $15,000 for this fourplex and I'm cash flowing $6,000. So I can buy these with my eyes closed, basically. And there is effectively no life event that is going to be detrimental to me at this point, not with $390,000 basically in bank. Again, pursuing big deals. And this one deal is going to basically take me out of the rat race now. So in purchasing this deal, I'm putting down $50,000. The cash flow is $2,400. If I needed to, I could even buy this apartment complex cash for 350,000. But we're not doing that. So if I buy this deal, it tells you, congratulations, you are now out of the rat race. And you have built up enough passive income such that your passive income is greater than your total expenses. You are now on your way to the fast track. And now on the fast track, the only objective now is to just buy your dream. So it's going to keep going around. You will get paid on the fast track as well, but you also have the opportunity to donate on it. You can also end up in a divorce, for example, and that will take away all of your cash. But because you are wealthy and you have assets, it replenishes a lot faster. Um, this one is 25,000. I mean, the cash I have is 690,000. These are not necessarily going to move the needle for me. Um, and yet it's producing $372,000. So we're going around. And another thing that will happen is once I get on my goal and I have enough cash to pursue it, to purchase it, then I will just do that and that will be the end of the game. Cash flow $8,000. I can pass on this. And voila, I am on the I'm at my goal, so I can now purchase my dream. So I have $272,000. My goal is $225,000. So I buy that and you effectively win the game. And that's it. And that effectively is the game of wealth. So this would have just been one of the strategies. I will in future workshops go through three, well, there are four other strategies that I've developed to actually win the game. And just for information's sake, Um, my real life objective, yes, exactly. My real life objective is to win the game in real life using the very same strategy that I demonstrated just now. So let's look at one thing before I close this out. What's the possibility of actually winning the game in real life using this strategy? So I pulled up three stocks on the Jamaica Stock Exchange to show what the price movements have been over the past 5 years. So this is Caribbean cement, right? And if you look at how Caribbean cement has moved, you'll notice that the price has gone down, peaked, gone down, peaked, and so on. So this is reminiscent of what we would have seen with the Mighty 4U electronics stock. So I could have, for example, bought um, Carib cement at $42 here or $41 here, build my cash, build my cash, build my cash, sold it at $80 here when it gets really high, and just wait. I don't know how far it is going to go down, but if I see it goes back to $50, which it did, I can then buy back a larger number of shares in Carib Cement. And again, I'm waiting. I'm waiting. Caribbean Cement goes up to $100. I wouldn't have probably gotten out there because if I see my stock go up 30, 40%, I'm selling. So by $86, I'm selling Carib Cement and just waiting again for the stock to come down. It comes down to $50 again, I'm buying it back. And at $85, this is where I would be selling Caribbean Cement today. In fact, Caribbean Cement closed today at $95. As you can see here, at $95. So what I'm hoping to show is that this is actually possible in real life, and that's the actual strategy that I'm using in terms of building wealth. Um, I am kind of following a dual strategy because I'm also using elements of um, business as well as increasing my income. So I'm really using more the hybrid strategy than just one. But the point I'm hoping to bring across is that it is possible to build wealth using these strategies as demonstrated in the game in real life. So even let's look at, say, an American stock. Let's look at Tesla, for example, which, by the way, this strategy works a lot better if you know the company intimately, and it is one that exhibits some amount of volatility. So let's look at Tesla's price movement over the years. Click on the technical chart. So if Tesla is the only stock that you decided to study and know, you could employ this strategy basically by buying Tesla when it is unreasonably low and selling the shares when they get too high in terms of the price. So when you think that it's uncomfortably high, you can exit and then come back in. So if you notice here, Tesla exhibits a lot of what we call volatility in that the price goes up and goes down a lot over the years. And so Tesla is a prime candidate for employing a capital gain strategy for somebody that is looking to use the stock market as their mechanism for building wealth. So to answer, well, to respond to the comment that you'd have made, Marceline, yes, it is possible to win the game in real life, but it will take time. And in the stock market specifically, it's two things that will determine your success. One is how good you are at estimating value. Well, three, let me add a third thing. So one will be understanding the business. Two is your ability um, to calculate or estimate value. And three is your ability to wait and to have emotional, I guess I could call it emotional stability. So you are not swayed too much by the ebbs and flow in the stock. You would have done an assessment to assess what is a fair value for the stock at different points, and all you're doing is purchasing when it is below that and selling when it is significantly above. And then what you do with those capital gains is you then start to purchase income producing assets, whether that is real estate, whether it is you invest in a business that will pay you a significant amount of dividends. So you buy a majority share in a business, for example, or you purchase other assets that you know appreciate over time and sell them. So like what do you call it? Artwork, bespoke artwork, or watches if you develop the expertise in that, or even collectible cars, stuff like that. And effectively, that's how you would employ this strategy. So with that said, guys, I'm going to end here and well, I'll stop the recording here. And if you have any questions, then I can take them because I have like maybe another 10 minutes or so.